Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on Nikola. We love a stable company with a fraudulent history that changes management all the time.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hello everybody, welcome to another stream. I have Ranger Dayne with me today.
Morning.
How are you doing, man?
Good. How are you?
Yeah, good. I see you have a very fitting outfit today.
Yeah, you see how I drink my coffee through my
Yeah. It's amazing.
That's a talent I've practiced over the years.
There's one thing I'm missing though. Where is the star? You need a ranger star.
Well, I'm like a park ranger. A little different.
Yeah, nice. How you
No,
doing?
I gotta have my rifle behind me.
Huh?
I said I gotta get that and have my rifle behind me.
Oh yeah. You look like someone in the video game Red Dead Redemption.
Yeah, definitely.
Yeah.
This would have been me like 100 years ago.
Yeah. You look cool. Very cool. I need one of those hats, I think.
It's actually pretty nice of it.
Yeah. Yeah, so what do you think about Nikola?
Oof. That's a stock that's all over the place.
Yeah.
Well, I mean, because you said too, I mean, that's Norwegian, right?
No, it's not Norwegian. It's I've been involved in a Norwegian company that was involved with them, but it is from the United States, and they had this crazy story. They were gonna make all these filling station with hydrogen for heavy transportation, and like that was the aim, that they're gonna have like a monopoly on the filling stations. Okay. Of course, in the future, there was a thesis that alternative to the electrical cars would be hydrogen. Right. But then it was Hindenburg. Have you heard about them? Hindenburg Research.
Oh yeah. Yeah.
They went on them. They opened a case and they just discovered. And the science was very clear in the beginning, also in my opinion, but I never trusted this guy Trevor Milton. He was the founder, he was the CEO for a while, and he still owns a lot of stocks there. But he was charged for fraud basically, and the Hindenburg report just crushed them. But the stock price, believe it or not, it actually went up to close to $100 per share. Now it's like below 1.
Yeah, well, that's typically how they bounce.
Yeah.
Sometimes, and sometimes it doesn't make any sense. The news is terrible and the stock pops, but whatever. I mean, that's just people
Yeah.
being
No,
nuts.
so that was a bit of a crazy story, and I'm sure things like this happen. But what I have seen is they have some big moves still. I know there's a lot of hype in that stock still, so it can move very big in days both ways, up and down. And I saw this week it was down 20% on some new dilution news that they have to dilute to raise money again. So I think the original thesis is completely dead, and yeah, I'm at this point I'm just following for the what do you say, the entertainment.
Yeah, at this point.
But I'm sure I'm sure you can make money there though, if you are that type of if that's your play.
Maybe if you trade it or something like that. But the problem with a company like that's not proven and the concept's not proven, then you got management who you can't trust. Like that's a terrible investment, in my opinion.
Yeah.
Like you're asking for way too much trouble there. Like you should be able to find easier like narratives and stuff, and you should be able to find much safer type investments. Because like I said, now if you're the kind of person who has a portfolio and you're spreading your bets over like 100 companies or something like that, and you're only going to put like 0.5% into them, sure. I mean, if you think the turnaround there is worth it, go for it. Yeah. But yeah, if they're diluting shareholders, it means they're not generating enough earnings and cash. No. So if they're not generating that, then that's typically passes by my interest.
Yeah, and they are definitely that was the thing all along. But the thesis was, at least in the beginning, was these filling stations and the fact that, and I still believe this, that I think there will be some alternative to the electrical car industry. Like that you get more choices than just gasoline and electrical cars, but that's a few years down the road. I think I don't think that will happen anywhere near quickly. And when the company has completely changed it, but they have produced some trucks and they are cool looking, but that doesn't help.
Well, that's important.
Yeah, that's very important. All right.
Are they as cool looking as the Cybertruck?
Sorry?
I said, are they as cool looking as the Cybertruck?
Oh, and that's the other thing. This Trevor Milton guy, he was promoting this. He was promoting this Badger. They called it the Badger, and that was supposed to be like a cool, similar, not similar to the Cybertruck, but a bit the same, you know. Yeah, and then they just I know GM was involved at that time, and I think they got tricked a bit also.
Yeah, I wish I knew the story a little bit better, because it sounds like an interesting one, but yeah,
crazy.
Well, that's the problem with those things, is it's kind of tough until stuff gets a little more proven. There, it's a lot of speculation, which a lot of speculation. I try to avoid speculating as much as possible.
Yeah. All right, let's move into the dashboard then.
Yeah, let's do it.
Hold on.
I'm just updating all my stuff here, so bear with me as I'm going through here.
Let me check real quick. There, I think we are. Yeah, so I don't know. I had a stream on Thursday, and I didn't find so many things that I was interesting about. Maybe people found it a bit boring, but that's also a bit part of the everyday research, right? That you don't always find exciting companies. But I might change my style of looking a bit so that it gets, maybe we can throw in like some more interesting ones on the next stream. But have you looked at something this week that have caught your eye?
Actually, not so much this week. I think it's because, like I said, in general, stuff's kind of up. It's a little harder, because if something's already on the up and coming, or the chart's starting to turn around up, it's a little. I'm kind of going to need a pullback or something at least to start getting interested. And like I said, that's partly because I'm taking heavier concentrated positions. So I know timing the bottom is basically pointless. I'm not necessarily shooting for a bottom by any means, but if I can get in somewhere where at least I'm comfortable that it's close to a bottom, or and I'm not really going to use like if I see a technical analysis like a double bottom or something like that, something that like and I'm not really going to would at least give you some kind of support. It's not like I'm not going to take that into consideration, but I have to have all the other parts first. No, in general, this week I didn't see much. So that's part of this, guys. Like if you're doing this style of investing, some weeks you're going to feel like you're just flipping stones.
Yeah.
I mean, even remember in our case stream, I mean, after a while they started talking about GameStop, but because once you get to a company or something that's like kind of got that hot narrative and everybody's interested in that one, it kind of takes precedence over a lot of the other things, because for a little bit, I'm in advanced emissions. I think you mentioned that. And right now that's kind of been my stock that I've been following closely. And I think over the next year that name has a real potential to turn around, as long as they, we got to see what the story basically is that there's supposed to be carbon neutral. It's a carbon neutral type company. So they're supposed to help other companies with carbon neutral. And there's some legality things coming through the United States in terms of what companies have to hit in terms of those numbers. And they're pretty much the one company that probably is going to benefit most from that, to help other companies with their coal reducing emissions, and basically like refining it and cleaning it. And they have to build and work on their plants to be able to go up to the growth that they want to be able to do. And the real question right now is, are they going to have to dilute shareholders to raise the cash to do that? Or are they going to be able to make enough in the meantime to kind of cover it where it doesn't hit either the shareholders, or they take on a lot of leverage to do it? Just from me calculating some numbers and listening to a few other investors, I think they're going to be able to do it beforehand. So that's probably my biggest play right now. But
yeah,
when I focus on something like that, I learned that story really well. And then I'm always still searching though for something else. Even if that's the one I tend to be talking about more, that doesn't mean that's the only thing I'm interested in.
No,
but like I said,
sure.
I do take large positions, but that's the benefit of being a small retail investor is we can hop in and out of stuff a lot quicker than someone who's got, even like $10 million to invest, so.
Yeah. But maybe we can pull that ticker up today, and you can just walk us through your thinking like you did a bit, but with the numbers in the background today.
Yeah, possibly.
Yeah. Yeah, I have not found so much this week either, but I was thinking we can go through some of the daily moves again. So let's start here. Do you have some tickers you want to do some research on today at all, or?
Well, I have a few. I actually haven't totally updated my spreadsheet. I have I typically update mine Monday, Wednesday, Friday, and then Tuesday and Thursday I'm really just checking Open Insider. And the reason being is I just don't have time to check it every day. If I had the time and this was a full-time job, I would be doing it every day. But just nature of my work outside of here. I'm not even sure if these are worth looking into, and I've already looked at them before and they didn't interest me before. So that doesn't mean that they will this time, but I have Hydra Farm Holdings. I have Olaplex Holdings, a lot of holding companies, I guess, lately. And then Worthington Enterprises. Those are three that came up on from Wednesday for me. So I still got to see what comes up from yesterday. And,
and I was thinking, maybe, do you want to do like an update on CONN?
Yeah, I mean, they came out with the poor earnings report, and to be honest, I'm out of CONN. I kind of got out before the earnings report. I think with CONN, I think it's kind of a misunderstood story there. I don't think there's necessarily a quick turnaround. So the reason why I got out of CONN is because I think in terms of them making it through this down cycle for retail and whatnot, I think they're going to do it. They have a VIE structure, which for those of you guys who don't know what that is, it's basically when they're like a like a rent to own. Like you basically can buy products from them, their furniture and that kind of stuff. They're primarily out of like Texas, and they have stores all over the South. And they were going back and forth on if they should continue to grow or whatnot. And like I said, so they're going into a down cycle. The debt looks insane. So if you just look at it on a metric level, it looks stupid. But the problem is how a VIE structure works is other people basically take the leverage on from all the assets that they sell out. So when they get credit coming back into them from the consumer, normally they would have to take on that underwriting risk of making sure that they don't default on that and that the customers actually pay back for these things that they're taking from them. But what a VIE structure does is it creates like packages essentially, and they allow other investors to come in and basically purchase it almost like a bond. And then the percentage that gets released from that lands on those investors, and then they only get a small percent of it. So let's say in terms of the volatility, if it was like a high risk like junk bond, because that's almost like what you can consider them, normally the company would take all that risk on. But now instead what they do is they say, hey, to these investors, you can come in, we'll give you a guaranteed, let's say 5% or 10%, and then they only take like 1 or 2% of that revenue back in. So they don't get as much revenue from giving out this credit risk, but they put all that credit risk onto those investors. So if enough people don't pay back and they default on that stuff that they lent out or loaned to people, and it's a little more complicated than this, but either way, just in layman's terms, it basically puts all the default risk on the investors who purchase into that and treat it like a bond. So all that leverage you can essentially remove from the company. I'm not saying you can just totally remove it. You have to take it into consideration, but it's not going to make them go into bankruptcy. So when you look at cons by just metric wise, it like, if you look at its current ratio and that kind of thing, it looks levered, but it's not quite as levered as you'd think. And the big argument at this point is, will they continue to, are they going to go bankrupt basically? And I don't see them going bankrupt when I look at the numbers. Now, is this the best time to hop in? No, because I think it's going to continue. I think there's going to be pressure on the equity no matter what, and it's going to continue to go down. And it's going to not be until that starts to bounce back. Now, obviously, that's probably when you should be hopping in, is when it gets really ugly. But I just got to the point where I wasn't. I just want to follow that story a little bit longer before I feel comfortable hopping back in. But cons does interest me. I know some people are thinking it's going to go bankrupt, but I like there's. Yeah, have you ever seen that guy? He's on Seeking Alpha, Illuminati or whatever.
Yeah,
he just posts every post is it's going to go bankrupt. That's all he says. He doesn't say anything else. He's just basically like a troll, a bankruptcy troll. But just if you have something to say, please say it. Don't just say it's going to go bankrupt. That doesn't mean anything to anybody. No one cares.
Yeah. No, the reason I brought it up, and we have talked about it before, right? So I also know a little bit about CONN, and I also find it interesting, but I never owned it, but I think I would have entered if my financial situation was a bit different at some certain points. But now it's like it has been dropping a lot the last month, so I'm like you. I want to just pay attention to it and see where it goes a bit.
Yeah, and it's something I'll keep an eye on for now, for sure.
Yeah. I switched to my weekly movers. Maybe we can find some. I saw there was some gold companies, and maybe we can pull up some of the tickers from here.
Yeah, let's do
it. So the first one I'm looking at is I Am Gold Corporation, IAG. I'm going to pull up that one.
All right. By the way, I'm watching the stream. It looks really good, man.
Yeah, good.
Like you're it's very clean. I hope people in the audience, if anyone's tuning in, if you guys have any suggestions in terms of like, oh, I couldn't see this well or anything like that, that you want us to, we can work on improving all that stuff during the stream, because we definitely want to make
For
sure
sure.
that you guys can see the numbers. If you can't see kind of what we're going over, it's the whole stream's kind of pointless, you know.
Yeah. And we are very aware to we are very motivated to improve the quality with the sound, with the numbers, with the colors, everything like that, that makes it easier for people to follow. I know I forgot a little bit last time to zoom in when there was some small text, and like feedback like that is very valuable for us, and we will try to take it with us and improve, you know.
Right.
Yeah. So the next thing I am looking at is yeah, what is it? Have you heard about the QRHC?
QRHC. I'm not sure.
But
I don't
I
think so.
see the upside, it's not so high, so I think we will ignore them for today. I mean, not the upside, but the percentage to 52-week high is only 29%, so...
Yeah, and typically I do use somewhat a 52-week high. Now that doesn't mean that, you know, I won't peek at it, because a lot of times when I'm going through my dashboard, for instance, if something like that doesn't like, let's say all the metrics look good, and I'm hoping there's somewhere where it could go higher than it's ever gone before, I'll at least pull up the news, because I might on a metrics side not be able to see that it's going to go higher than a certain point. But if I can at least find the news and maybe figure out some kind of growth story, I can at least take that into consideration.
Yeah. I just pulled out VNET, VNET.
I've definitely looked at them.
I'm just going to continue so so that we find something. RH, have you heard about RH?
Isn't that Robinhood?
No, no, it's
No, it's
furnishing.
not. What is their ticker? Did they go public? Didn't they go public? Yeah, they did.
The name is just RH, but the ticker is also RH, so I don't know.
I've looked at them as well. Let me go to my database here.
The market cap is a bit steep, but I think I'm pulling them up anyways.
Or maybe I have not, actually. They're not in my database, so
You can check them out.
yeah, the name sounds familiar. I've definitely seen the ticker, but I don't think I've ever looked into them, so they must not have technically caught my eye just on that basis.
And what do you think about like software companies, Dane?
I'm okay with tech. I'll go into tech. Tech doesn't bother me at all. And honestly, I'm from a younger generation. I don't think I don't understand tech. I think where you have to understand there's a limitation, because there's a lot of big players in tech, and it's tech's one of those things that when I see something getting adapted a lot, that's when I understand it better. Like, because it's one thing to see a proven technology, and it's another thing to show a company that's making money, as well as all of a sudden spreading across, like everybody's starting to use like an app, or everyone's starting to use like a product like that part. That's like almost what Apple had, you know, like Apple started to become a pretty obvious investment right when all of a sudden everyone's adapting an iPhone, and the money's like, you know, Apple's earnings and everything are just killing it. So not only do you have really great metrics from a company who had struggled for a long time, but now all of a sudden everyone's buying that product, you know, and when you just start to see that kind of market change, that's when tech can be interesting. And it's hard to catch it early with a lot of these other smaller companies, especially because if we're looking at tech, it's most likely a small company. So where I've seen success with tech in the smaller cap stuff is, say it's like a defense contract or something like that in the United States or whatever country, like says we're doing this, and all of a sudden someone's back orders are massive, you know, that's a company that's going to start to interest me, because I know there's something to that, you know what I mean? And then it's just trying to figure out how much they're going to make off all that.
Yeah. I just saw one called YEXT, YEXT.
Gotcha.
I'm pulling that one off. And then I think the last one that interested me here was maybe ASYS, Amtech Systems.
Gotcha.
So maybe that can be our starting point for today, and after we have gone through those, we can maybe check some of the ones we have already talked about.
Yeah, sounds good.
Yeah. We'll just pull it up then and
All right.
And by the way, if anyone's watching that are trying out to build the sheets and have some questions about, or if they have tried like YEXT sheets or ShareRadar, let us know so we can discuss our experience about them. Because I think you are very happy with the ShareRadar as well, Dane, right?
Yeah, no, I've been happy with it. I mean, there's a few things I wish they could adjust, but in general, yeah, no, I'm happy with it.
Yeah, because and if anyone has some suggestions about other data providers, let us know, because that would be interesting to just like compare and see them how accurate they are and everything like that. So I'm starting with IAG today, Dane.
Gotcha. I'll let you kind of go through your take on it, and then I'll tell you what I'm thinking here.
Yeah, I see my sheets are a bit slow right now, so I don't know what's going on, but hopefully they will come. But right now I don't have the description. Can you just update us on this was the gold one, right?
Yeah, just a second here. Let me just pull up one quick thing here. Sorry, I'm just reloading something real quick.
Yeah. No, but what I see is the revenue has been decreasing a lot from 22 to 23. So that's not a good sign. That's the first thing I saw. They are below book value. Book seems to be a bit stable, but it moves a little bit up and down. And if you go back to the better years, it has fallen a lot. There's no dividend. Earning is positive, barely. They turn out as levered, but they don't issue any stocks in my sheet.
Gotcha. All right. Well, I have so just to go over the description, guys. It's Canadian-based intermediate gold producer and development company. Principal activities are exploration, development, and operation of gold mining properties in North America and West Africa. Its projects include Essakane, Westwood, and Cote Gold or Cote. I don't know how you say this. It's located in northeastern Burkina Faso, West Africa. Either way, let me just read through this real quick. Basically, it has a bunch of properties that it has gold mines or it's building gold mines on, kind of all over the place. So it's a miner.
Yeah, and Canadian, right?
Correct. It's Canadian based.
Yeah.
Yep.
I saw my description just updated now. Sometimes it's a bit slow. Let's see how it goes. I see they have taken on, the debt has risen in the last 2 years, almost doubled. So I would have to check through the debt, even if they don't issue share here. I don't like the decline in revenue and the increase in the debt. There has been a few sales, I think, like asset sales, but not anything substantially. So I'm not sure how much I'm going to pay attention. But the cash metrics is not super strong. What do you see?
Well, I think no matter what, you got to go with miners. I've always found instead of trying to do this, we almost have to go right to like Seeking Alpha or something, because we need to know where those mines are. Are they developed? What's producing what? How long are they going to be producing for? Like the one quick thing is like gold right now is bullish. Like gold's getting to all-time highs, which which bodes well for this kind of a company. But in terms of revenues could be just declining because they closed the mine or something like that. That doesn't mean the more important thing here is our margins. Where are our margins at? Because if I have one less mine, but my margins are still good, that means the one mine is still producing well. So that's more what you gotta take into consideration. Now, as the revenues shrink, it is important to think that, you have less assets creating money. So you have probably less cash flow and probably less retained earnings to send back to shareholders. But that's the way I look at them. So this is more one I got to see the story on besides just looking at the numbers here.
Yeah.
Because it's going to be all over
they
the
have
place.
some. Sorry?
I said it should be all over the place with most miners. I feel like they're not really it's very rare to find like a stable company that's mining.
Yeah. They do have some excess cash, I see. But let's pull up some Seeking Alpha articles then.
Yeah, it sounds good.
Zooming in a bit this time. Right off the bat, I don't recognize any of the names of the writers. Do you?
I think I've seen this Alberto guy who wrote the most recent one. This is from October 27th. And he's just saying right now, based on what he sees, it's overpriced.
Yeah.
Let me, I didn't even look at the chart. Did you get to see the chart? I just want to see what it historically has earned. So another thing, sometimes just not that I don't want to not see the chart, but yeah, I mean, you can see this thing bounces all over the place.
Yeah, I'm going to pull up the chart too, so we can see it. Oh yeah.
I mean, this one's a little kind of tough recently, just because if you're looking at currently, I don't know how much upside's here.
No, that's the thing. And it has been straight, like it's gone up and down lately, but it's pretty much on the same level as it was in August.
Yeah, now see, like back at the before 23 when we got below like $1, like that's interesting. That's really interesting. So for me, this is already, we can almost pass on this. I mean, I'm gonna read a little bit of the story here.
Yeah,
but I'm gonna need to see this get down to that mark. I'm gonna need that kind of a pullback. Actually, I almost immediately agree with what this Alberto guy is saying, that he's gonna want to pull back if you're gonna.
Yeah, and I agree. And I think even then I would have to really do the research. But he said something about a mine in Ontario, right? That they have a new asset in Canada then.
Yeah, like I said, it looks like they have a few mines in like 5 or 6 different areas. So
yeah. No, but we can move on. I'm not gonna add this.
And I guess the only thing maybe I would have to add to this, and maybe this is something I'll keep an eye on to see how much this affects this kind of a company, is as the price of gold continues to, it'll probably continue to break the new highs now that it has the support. If you look at like the gold chart now, the support's like, or resistance, I would say, on the tops like at like 2100. So if it continues to break through that, you might see a company like this start to reach some all-time highs in maybe in like the last year, like 52-week highs. You might see them start to break through. So it could be bullish just based on that, I bet. But I would like to see, is anybody else, did you see if there's any insider or anybody else interested in this?
I no recent ones. Sorry, it's because it's a Canadian, so I am not, I don't have the source.
And quick question for you. On your spreadsheet for your dividend column, I noticed there's like blanks. Does that just mean that they don't offer a dividend on yours?
Yeah.
Okay. That's what I figured, but.
Yeah. I pulled up the gold chart, and you can see it's pretty much following that, except now in the end of the chart, it has not been as bullish as the gold chart, but the lows in October is the same as in the gold one, so it's tracking gold, of course.
Tracking gold. But you, I mean, the interesting thing though is gold's not going to go down. You know, where you can get a ton of like doubles or triples. Where this one, you actually, if you bought it at the low there, you might be able to
Here
get a
you had
double or
it.
a triple.
Yeah. And you might not get, you see historically that's very low in this company. Even all-time low, I think it was.
Yeah, I'm scrolling through that Seeking Alpha article by that Alberto guy. He does go into breaking down the different mines and how much he predicts, or I don't know if it's his prediction or if it's just what the company's saying, but he seems relatively bullish on it. So you know, this is probably one I will read a little bit more as we go here.
Yeah. Did he have a price? Like a upside price?
Let's see. I don't know if he actually says the price versus they do have a lot of debt, which I'm sure is just to cover the capital expenditure of the mines. So that's another thing too when you're looking at these kind of companies, that you know the miners compared to just investing in gold is always higher risk, higher reward essentially. So they do interest me, but there's so many things that can happen with gold, because now you got to take into the political landscape, you know, and environmental, you know, protections and all that kind of stuff.
Yeah. No, I think we're gonna move on.
Just the signs of buy rating. That's what I'll go with for now. I don't know
Yeah.
if there's much more else to say.
The next one I have is VNET.
All right.
I can see that my sheet is a bit slow today. It's not usual that it is this slow, so I don't know what's
Well,
going
here,
on. But
either way, well, yours is loading because it's going to happen while you're streaming. It's going to take a sec, I'm sure, to update. But
yeah,
mine says VNET Group, formerly is 21 VNET. I definitely looked at them when they were 21 VNET. It's a carrier of neutral internet data center services. Hosts its customer servers and networking equipment and provides interconnectivity. The company provides managed network services to enable customers to deliver data across the internet through its data transmission network, its smart routing technology, blah, 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 last mile wired broadband services. It offers public cloud services, private cloud, hybrid services. So it's all just tech in terms of distributing the information.
it's a Chinese one though.
Is it Chinese?
Yeah.
All right, so there's obviously a little foreign risk there.
And I don't know. I've never figured this out because I'm not focused on it. But I think this messes up a bit with my numbers. So maybe you can walk through a little bit of what you see, and I can see if I have the same numbers.
Yeah, hang on. I'm just pulling up the chart. Yeah, see, with the Chinese ones too, it does get a little messy.
Yeah.
And the reason why, and I don't know how your data gets pulled in, but when I use it on my side, you have to take into account because most foreign companies only either file biannually or once a year. So my spreadsheet normally looks at every fourth quarter. You know, it finds out what the most recent quarter is, and then I tell it to pull in the fourth quarter. So that way it's a true 12 trailing month for each year that's shown in my data. But let's see here. No, I think your numbers are. I think your numbers are all right.
Yeah.
I think the concerning thing here is our margins.
There's a decline on almost all the margins that I'm paying attention to in the single years, and also you see in the 3-year average they don't look so good.
Yeah, so just if you're looking at your numbers, the main thing that I would look at here is the margins here. So if you notice net income's negative here, but you do have positive cash flow from the operations, but free cash flow is negative, which means that their capital expenditure is so high that it basically all their cash just goes into building their infrastructure. So far they're not really making a ton in any kind of actual earnings. So there is something to say, but this business has to scale up all the way to a certain point that it's going to start to be able to make money on these margins. Now, once a lot of this stuff gets going, the actual maintenance is cheap. I mean, you're sending data through the air, you know, and through wires and stuff like that. The data part is free, but that actual infrastructure first is very expensive. So I'd say this is probably more of a growth company, because we're going to try and figure out where these guys land in the future. You know, in a few years, how much are they going to be able to generate once that capital expenditure starts to come down? So another one, once again, we got to go to either Seeking, or if you, I feel like on the stream, it's going to be tough to go into 10Ks just because that's pretty boring reading.
Yeah, I don't want to do too much of that.
I do want to just say, you know, if you're looking at a company, it's super important to go through 10Ks and the 10Qs, because it really gives you a better understanding of where the company sees everything and what they're predicting and what they've said in the past. Those are all super important to know. But I find Seeking Alpha in the meantime, if you can find a few people that you agree with, you can at least get an idea. But the other tough thing too is this is coming out of China, and investors are just spooked on China right now. I mean, there's just the political landscape going on right now. We've got wars going on, and China and the United States especially have just kind of haven't been able to resolve a lot of the differences that there is. I tend to pass on a lot of these guys just for that foreign risk right now. I'm not saying there's not something here, but I have a hard time already thinking that there'd be a quick catalyst for this if you know, based on everything I was just saying.
Yeah, and I see on the articles that has been written, it's a lot from the same guy, so I don't think like we should go more into this. I think we should move on already. You agree?
Yeah, well, you can move on to the next one. I'm going to just take a quick look at, yeah, I mean, everyone's saying downwards. I've looked at Value Pendulum and Bamboo Works. Those two do a lot of the Chinese companies. So yeah. I respect their opinions.
Yeah.
But it's tough. It's tough to, you know, that's all the information that you get fundamentally from some of these other countries. It's not audited, you know, so you have to just kind of take what they're saying, you know, as a grain of salt, you know, as they say.
Yeah. And I think the way I've learned this now through the streams of RK, personally for me, I don't think this is something I need to improve a lot on, to look at companies outside of the markets I usually look at, because it throws me off a bit, and very quickly I feel like you just said, there's a lot of information that I'm not sure if I can trust or not, so it makes it just a bit harder in general.
Yeah, and so the other thing too is it's there's this guy's saying not only is the EBITDA guidance now down for VNET, but on top of that, I guess there's a 600 million convertible bond that they have to repurchase at some point. So I would say this is a pretty easy pass right now.
Yeah, I saw the leverage was very high.
Yeah, so that's a tough one at the moment to really get too excited about.
Yeah,
but this is I mean, this is how it goes, guys. Yeah, you're gonna find stuff, and like I said, a lot of times too, and I know this isn't really a great excuse, but when you're looking at foreign companies, it's just hard to really trust your data, to make sure that you know, to make sure that there's really accurate stuff coming through, because I've looked at a ton of companies, especially from China, where the numbers just don't add up. Almost immediately, it doesn't add up. You know, you can just tell by, you know, within 10 seconds that they're saying they're generating all this, but they don't have to tell you what their cash flow is and all this. So, and some of them are just like an app company, you know, and it's like, you're a small phone app that's making, you know, billions of dollars in revenue and I've never heard of you. I doubt that.
Yeah, no, it's
You
a
know.
good point. I pulled up RH. That's the one that we were a bit insecure about if we have done before.
Yeah, I don't think I've looked at this one. So mine says it's a retailer, luxury lifestyle brand operating primarily in home furnishing. Offers merchandise assortments across various categories, including furniture, lighting, textiles, blah, 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 all these different things. Sells waterwork products through waterworks.com. You ever heard of that? Waterworks.com?
No.
I'll pull that up in just a sec. Includes restaurants and wine bars. Interesting. So it looks like they have a few different it's mostly like furniture type stuff, but I don't know if it's like presets that they already have to show off, like, because it says they have showrooms. So I don't know if there's like, I don't know if it's almost like, you know, when you go IKEA and they have like the different little rooms and stuff to check out.
Yeah. They are down 14% yesterday, so something we can check the news later. But I see. Do you have a lower share count in 23 than in 22?
Hang on just a second. Let me just pull it up here. I mean, I have 18 million shares right now. Is that what you got?
Yeah, but I had 26 in last year, so that's a pretty big drop.
Yeah, we'll have to see if they repurchased.
And I also see that the debt has been decreasing in the same year from 22 to 23.
So it looks like they were doing a large buyback, but the company lowered its profit margin expectations, which is why you saw the big dip just recently. This is oh wait, December 8th. So this is yesterday, right? Yeah.
Yeah, yesterday. 2 days ago, there was a quarterly report.
You know, I think this is typical. You're going to see this in these kind of luxury brands that you know, people aren't going to be buying like super nice high price stuff. You know, it looks like you can compare these kind of guys to like Williams Sonoma. I don't know if you know that from in Norway. Is that in Norway? You ever heard of that store?
No, I'm not sure about them.
Typically in the States, you see a lot of those. They're like kind of like a big retail store, but they're not like massive, but they have really high quality, nice stuff, but it's pricey. So it you know, they're only appealing to like upper middle class, I would say, at least.
Yeah.
Just see. So I think like most things, I think it's just a pessimistic outlook, you know, going forward. A lot of these retailers, it just looks like there's not much. And so they froze their buyback program, it said.
They have frozen it.
It said, yeah, and it said they still have another 200 million left on their plan to buy back.
Yeah. If you look at their website, it looks very nice.
Buy back for a long time. You know, this is something that confuses me. So imagine your management running a company like this, and you're buying back stock, right?
Yeah.
And you know you're going to come out with a weaker report than what you said. Why are you buying your stock before the weaker report?
Yeah.
If you know you're going to put that out, I mean, maybe they just waited till Black Friday or something like that to see how their earnings were. I don't know when. You know, you have to figure out the cyclicality of a company like this and see when they typically make most of their money. I would imagine something like this, since it's like home furnishings, it's probably, as the housing market gets worse, it's probably like a longer term thing. It's probably not like during the year. There's certain times that are better than others. But as the housing market slows down, people aren't necessarily upgrading to, especially to luxury.
No. And like you say, we have seen a lot of examples on big drops just on future guidance in the near term. So it's definitely a tough environment for these types of things. And When I saw the pictures here, this is not for everyone. I think it looks very luxurious and
Yeah, it's all granite and stone, and I mean,
Yeah.
don't get me wrong, they're very nice products, but
yeah.
yeah, I just wonder what the market is right now for this kind of thing. Because the other thing too, I was just looking at this. You know, most of the houses are, or like it's one of the highest it's ever been. I think I saw yesterday it was like 28% of the houses that were purchased recently in the States were through like larger investors. So it wasn't like home buyers per se. So you think those large investors are going to buy and then put luxury stuff throughout the house? Like they're not
No,
going to spend that
exactly.
much. You know, they're trying to flip these things.
Yeah. And I
And don't get me wrong.
have you seen the market cap? It's pretty big. And also it comes with almost a 20% short interest. So I think I'm not gonna add this already to the tracker.
And I know Waterworks is just probably one part of it, but still. But I mean, let me just look at some of the numbers here. I mean, it's historically, it looks like a pretty well-run company, right?
No, but I'm not
What do
like
how much is their debt right now?
I get 1.2 billion in total,
Yeah.
and
No, I'm
that's a
looking at
big.
your numbers and like your tangible book value all of a sudden skyrocketed negative in the last total 12 months.
Yeah,
Is that right?
I'm not sure, but we can go to the balance sheet.
But I mean, if you look at their free cash flow metrics and their operating cash flow, it's not bad.
The net cash flow is bad though, the last year.
Yeah, but that could be if they purchase something, then their cash is just down. That doesn't necessarily mean. I mean, it's not great, but it's not necessarily bad.
No. And they have some acquisition, so that may be what is going on. But the thing you said about management is interesting because if you just look at these fundamentals without knowing the guidance and the drop, it can be looked at a positive that they buy back shares, they pay down the debt, they are navigating through this. But then why? Maybe not the best decision in this environment if you know that you're gonna have bad numbers, like you said.
And like I said, maybe they didn't, but you know, crazy
And
thing is you look at the price of a stock like this, and this seems like a stock that, you know, it probably wouldn't move like all too crazy, but you know, this is something that goes from $200 to $400, so it's still technically it could double.
Yeah. They own 10% though, insiders.
Yeah, and then I did notice there's a decent short interest though too.
Yeah, 18%.
Yeah, so I wonder who's so bearish on it, and if it's just from the same kind of environmental factors that we were talking about just now.
Yeah. It seems they have spent, well, we have already covered, but they have spent a lot of cash, and maybe if you look in the past, the share price has also the share price. No, I mean not the share price. The outstanding shares is it's a bit up and down. If you don't see this so often, do you?
No, but I mean, if that's the company's route to buy back shares, you know, I'm not saying that I don't appreciate management doing it. I just I guess it's tough. You know,
Timing.
if you have all that cash, maybe that's what they're doing. How much was that acquisition? Did you say how much the acquisition is in total?
Oh, I have.
Or
Need to
use
do it
just
on
per
the
share?
calculator. I have 1.86 per share.
Yeah, no, I'm just wondering how much they spent just in total, but because the other thing that's so strange is did they sell a piece of the business off? Because why did their assets drop so much?
I think like around 30 million they spent.
Yeah, because they had 1.5 last year in January, and now they have 360. So that money went somewhere.
The short-term debt though is at 0, so they have control of that. They have 1.6 billion in property and equipment.
You know, one of the people in the comments too said that it's not necessarily that it's actually frozen. They just haven't used that last bit. So he said it could be that they're just waiting until the price continues to drop. So I don't know. Maybe management is trying to wait and time a better buyback.
Yeah. And in that case, that's very good. But and maybe they knew about the outlook was poor, so they knew the stock price would get hit a bit, and then maybe if they come with a buyback now soon.
And actually, what management said in their guidance is almost the same thing that me and you were just saying, is that most people now, with the housing market freezing, it's leading to people not spending like they had anticipated.
Yeah. But then I kind of want to see something happen in the near term here in terms of a buyback or inside buys or anything. I can look at the, because they own 10%.
See, and one of these guys commented, and he's saying that they took on a bunch of debt and took out loans to buy back the stock, but now the insurance payments are biting them, and with slower sales and lower margins, I think maybe they were a little overzealous on the repurchase plan.
Yeah, exactly.
You know, in this kind of environment, if you're the worst thing is when you're forced to take on debt, but if you chose to do it too, I mean, they had good margins though, right? So I guess maybe they thought that no matter what, they're going to just push through anyway. So maybe it's not such a big concern. But I don't know. I mean, this is pretty expensive. I have a hard time thinking that there's a ton of room of upside, especially in this market, that we think we're going to make. Like, you really think this is going to bounce too much? I would definitely wait for a big pullback on one of these. This would interest me if it had another big sell off or something, you know?
I agree. I would not enter. If you look in the pandemic, it went down to 86. Not that I think maybe it will go down there again, but you can say that the chart has a bit of support closer to 200, and even then it would be maybe. What do you think? Would that for me it would have to drop even more, I think.
Yeah, I mean, you can obviously see that's definitely a line of support right there. So if it breaks through that, then yeah, I'd have to follow it more and see where it goes from there.
I mean, we're still Googled the CEO Gary Friedman. He's a billionaire, so maybe that.
Yeah, I've heard of him. So
you've heard of him?
Yeah, that name. I think that name sounds familiar. Gary Friedman.
Yeah.
Does he own anything else? CEO of Restoration Hardware. Okay, maybe that's where I heard of him.
Yeah, but
is that their name?
The company.
I kept thinking. See, the stupid thing on here is nowhere does it say Restoration Hardware, and it keeps thinking.
No, it just said
I saw the Waterworks, so I'm thinking Waterworks. Okay.
Yeah.
So they're Restoration Hardware too. So that's the other thing we have to look at too, because we're talking just Waterworks here. So what else? What else is Restoration? I just want to pull up their company.
Because he's, in terms of the insider, he's the majority owner with 21%. The rest of the insiders, they don't have so much in terms of percentage. There's one with 1.5%.
Gotcha.
So he's
same
the main
thing though.
owner.
I mean, it's all the same thing. Whether it's Waterworks or Restoration Hardware, it's still there's still higher end stuff. And I still think no matter what, the argument here is that the market's frozen for the housing, and people aren't going to be spending a ton of extra money. I mean, consumers are already strapped. You know, you can see the credit. You can see the credit. You know, is like skyrocketing for the average American, and I'm sure it's not just America. I'm sure that's going around the world too.
Yeah. But I mean, like they were minus 14 yesterday. I would need to see more of those days before this get interesting for me.
Well, I wouldn't if I own this, I wouldn't be super bullish right now. I'll tell you that. Not a minus 14%. I think that's going to spook a lot of investors, and this one's going to go down for a while.
Yeah, and in this case, I don't think you can ignore the short interest either. Almost 20%.
Where have I heard of Gary Friedman before? Is he? I must have. Does he? Oh, he started a Gap.
Clothing
and
brand.
Then he had 13 years at Williams-Sonoma, where he took Pottery Barn. Okay, maybe this is where I've heard of him. So he's been in a few places before.
Yeah. So
Well,
he should know what he's doing though.
Man, you imagine that? This guy was a stock boy, and now he's worth $3 billion or 1.3 billion. I would. He lost $200 million yesterday on that 14% drop.
Yeah.
I think I have bad days. I don't have bad days like that.
I'm sure.
All right, what's next? What's next?
Yeah. Next is YEXT. Okay.
YEX?
YEXT.
Oh, okay. Provider of an answer platform. Answers anything you ever need to know.
That was the tech company.
Yeah, I'm just well, it owns 200 services, application providers, which it refers to as its publisher network, includes Amazon, Alexa.
They have some cash.
I guess I want to pull these. I want to read a little bit more on what these guys actually do. It's a little kind of confusing based on just the description of the company here. In October, this was at 21 times earnings.
In October. Oh yeah, it went. Oh no, sorry. In October. Oh, I see what you mean.
Yeah, Olivieri wrote something on it. I've read his stuff before, so that's what I was looking at.
I see. He writes a lot about many different things.
Oh, so yeah, it's okay. That's what I thought it was. It's an AI search company. So it helps all these other companies to basically, go through its data more efficiently.
Yeah. Subscription basis. So that's the platform, I guess.
Yeah, it sounds like they're trying to figure out ways to actually lock in the cash from the service that they provide better.
You see, they have some net excess cash.
Sorry, what were we saying? I was just reading something.
They have some net excess cash per share. I get 0.91.
Yeah. I mean, it says they had no debt, so any cash that they have is excess. So, and it looks like all the margins and stuff are slowly starting to improve, but the problem is they still don't really have too much in terms of earnings. So I think we're just kind of waiting for that to turn around slowly here. They're just the problem right now I see with this is it's just too expensive. They have to prove themselves a little bit more. And this is it's obviously an up and coming company. I mean, you look at they've almost quadrupled their revenues. So, and capital expenditure seems very, very low, which is good. I mean, that's great for a business.
Yep. And also the retained earnings is getting worse and worse every year. So they are, that's just strengthen also what you said. This needs a bit more time to establish and see where it lands, you know, before you can, at least for our style, before you can take some good decisions, I think.
Yeah. I mean, it looks like the shares aren't increasing and they're not taking on any more debt, right?
What do you have as debt? Because I have 109 in total million.
I want to just go to the SEC real quick and see what it says on there, because the problem with share radar data too, sometimes with debt, is I got to figure out what that debt is.
Yeah.
Hang on, I'm just getting to the balance sheet here.
They have one called unearned revenue current. What does that mean?
Well, it's just saying that that's revenues that they haven't been able to lock in, but really all the debt that we're showing here, that 100, that's just operating lease. So they don't have debt. It's operating
Okay.
leases.
I've not seen the unearned revenue before. Is that just they are expecting that to come in, or?
Yeah, it's coming in. It's just not there yet, so they consider it a liability.
Okay. So in my numbers, that is included in the debt number, so they probably have almost nothing then, right?
Yeah, no, I mean, if you, because how much does yours say for debt?
In total, it says 109, but in near term, it says 17, which is their leases. So nothing then.
Yeah, because the 17 plus the 92 for the long term, that's the 109. So that's
Yeah.
so they don't have debt.
Yeah.
So I mean, an interesting company. You know, if they can turn things around, this is the kind of company that if you're going to be a growth investor, I feel like you could be bullish on this one, because if you believe in the narrative on this, then this is a safe company. If it's not in debt, and if it still has cash, the trick is making sure that you don't burn through that cash to get to the point where you're making more money. But with the margins slowly improving, it's just management at this point now needs to prove themselves, right? I mean,
Yeah.
management needs to prove that they can turn this into a company that's going to generate earnings.
But could you say that you see some signs of that happening already? If you look at just at the 2022 compared to the 23 numbers, the revenue is a bit stable and the capex has gone down a bit. The cash generation is up. Earnings is a bit up. You know, maybe they are starting. You can start to see something.
Yeah, I just think it got really probably overbought at one point. Just because, you know, growth investors tend to pile into these things. And I mean, you can see this thing's gone from 20 some dollars to $4.
Yeah.
So that's the problem with growth companies, is as management comes out and starts to offer future guidance, sometimes that can really, you know, that can really hurt you, because you know, as an investor too, because you have to be so sensitive to that narrative. Because if you're predicting, you know, growth, let's say in 5 or 10 years, and your whole model's based on that, if anything changes and all of a sudden that number comes way down, well, you bought in something, you know, where it's not even close to what it's going to be worth. And we're talking in the future, let alone today.
Yeah.
And this is why I think it's tough. I think a lot of people I know have done great in growth investing, but in terms of trying to use, you know, to be confident in some of your growth investments, it's tough, because if you're at all wrong, the whole thing falls apart immediately.
Yeah. And usually things doesn't go to plan. It's a bumpy road.
Yeah, I mean, the one good thing growth investors have is, you know, stocks move up and to the right.
Yeah. All right, the last one, ASYS. Maybe I don't know. How long have we been doing this now, Dane?
7:30, about what, like an hour and a half?
You have some time to go through some of the other ones that we started the stream with, or?
Yeah, sure, whatever.
So this one is Amtech Systems, ASYS.
What's the ticker?
ASYS. They are at the 52-week low now, and I saw there was some insider buys 3 months ago. 6 months ago.
So they're involved with the manufacturing of a thermal processing and wafer polishing for the semiconductors, such as silicon carbide and silicon power, analog and discrete devices. They're involved in some of the EVs and the clean tech applications. So it looks like that's more in the actual production of the parts that are going to be used in the semiconductors.
Yeah. The chart looks a bit all over the place, up and down, up and down.
Yeah, well, it's probably going to trade along with other semiconductors.
Yeah.
You know, as that business goes up and down, you're going to see. But it is low here, so I'm definitely going to want to look at the fundamentals here and see what see if this is worth anything. Where is this out of? You know?
Arizona. The headquarters is in Tempe, Arizona.
Okay.
And they had positive earnings the last 2 years, actually.
Revenues are decreasing. They've been slowly diluting shareholders, but not too heavily.
The net cash flow margin is way down, and some of the others also.
Well, it probably will be, because if you notice, cash flow from operations over time haven't really been positive. So without generating cash from the business, everything's going to start to slow down. Everything's going to start to keep going down.
Almost, well, very little in capex though, historically as well. So
well, yeah, they whatever they have set up. If it's just like I don't know if they have a factory or whatever they do. They must have somewhere where they actually do the cleaning processes.
if you go back to the chart, it looks very ugly now in the recent time, and as it is already at the 52-week low, maybe this can drop further.
Yeah, I just want to learn a little bit more about what's going on here.
There's 30 million in goodwill on the book.
Yeah, it looks like they're saying, I'm reading one of the Seeking Alpha articles, and they're talking about they have an M&A strategy to try and create inorganic growth. So maybe the initial business now has kind of reached a peak, and they're trying to find other ways to spend their capital wisely. But kind of worries me that the initial business isn't. I like when companies are able to focus on their main business. I'm not saying they can't find other things, but you're in the semiconductor business and you're having a hard time making money.
Yeah.
Something's got to change there. But I don't know. Maybe someone will be interested in buying them.
That could possibly happen, but
just because if you think about it, if you're a semiconductor business and you're building semiconductors, and these guys have one of the processes that you need, maybe it would be beneficial to you to own them.
I'm looking through the press releases, and the first one I see is that they have postponed the fourth quarter and fiscal year 2023 financial results to Wednesday. So that's not always a good sign, is it?
Yeah, sometimes that makes you wonder why they're waiting.
To allow more time for the completion of its fourth quarter and year-end report and audit procedures. I don't know what that means.
It means someone hasn't done their job on time.
Yeah. But it's not so much down. That was 6th of December. Probably on the chart, right? If you go to the daily.
Yeah.
Yeah. Since 1st of December, it looks ugly.
Another guy brings up an important point too. I guess the competition for the company is very high. He says it's internationally positioned companies with historical trajectory of the industry, as well as small producers of specific products, mainly located in Asia, that have the advantage of having a cost structure significantly lower. So he's saying a lot of the other companies that are out there are in other areas, and this being in like the US and stuff, to stay cost competitive is really tough with some of these cheaper labor areas in Asia and whatnot. So I don't know. They might have to. This is a tough one to think that there's. It can't just get out competed.
Yeah. Yeah. No. And they are trading above tangible book right now. If you look at the market cap, though, do you think this will struggle a lot if it continues to drop from here?
I think if they can't get their operating margins up, I think it's going to continue to struggle. I mean, you can't run a business if you're not generating cash. It's that simple.
Yeah.
I know some people think value investors are nuts, which sure, but if the business isn't able to start generating cash in some way, and you're just hoping to change narrative and go on that, like that only burns investors for so long before everyone becomes bearish, and then you got to start taking on debt, you got to start diluting equity, and it's not going to happen, and you're going to get bought out or whatever. I mean, that's maybe their best shot here is getting bought out.
Yeah,
I don't know. I'm not that kind of investor where I could really predict something like that, but they had a CEO transition in August on 9th, it says. So my guess is they're trying to figure out ways, and they said they did have an M&A strategy they're putting in place. I'm trying to find where it says that and what that strategy is.
Yeah. I'm just going through some Twitter posts to see if there's been some rumors about someone coming up and buying them up, but it's just noise from what I see. I don't usually go to Twitter, but maybe sometimes for rumors like that, it's a quick way to see if someone has picked up something.
Yeah, I don't know if it's that, or they're saying that they're looking at buying other companies out there where they might be able to, increase their margins. So for instance, like we're talking, there's these other competitors that are in countries like Asia and whatnot. Maybe they could go out there and buy one of those, which will help, increase their margins overall.
Yeah.
Because no matter what, I mean, especially in today's day and market, there's something for being in America. Like, I know it's more expensive and it's tougher, but let's say in the future, as relations continue to decline between different countries and whatnot, if you're a company who's been making a ton of profit by being in certain Asian countries, and all of a sudden that gets cut off for whatever reason, then the ones that are left in the States are going to do extremely well, because all of a sudden everyone has to come to you. And even if you were charging more at the original part, if everyone has to buy from you anyways, it doesn't matter. You're just in the right place at the right time. And I think after COVID, everyone takes that a lot more into consideration because when the supply chain gets interrupted, it's like the first time that all of a sudden everyone realized that, you know, there might be a real disadvantage to not having a few companies in our country that actually run some of these things. You know, having everything spread out across the world's great until all of a sudden you can't get that stuff back in. And then all of a sudden you run into this like wall where you can't get the products you need. And if they would have just had a few places here doing it, and you know, I almost think it's the United States benefit to almost like subsidize those kind of companies to keep them in the States. You know, whether that's worth doing and the political issues with that. And then also too, you know, I'm always a fan of free market. So I don't know if intervention is ever necessarily a good thing, but there is a risk when you're relying on other countries to provide products if that's not a guarantee.
Yeah. So nothing too interesting then.
No, it's not that it's not interesting. It's just like I said, you know, we're waiting for the you know, the slow pitch, as Buffett says.
Yeah.
At least I am. I mean, you know, I think RK, you know, towards the end of, and especially because of COVID, and there was just so many opportunities to buy. There's something for saying, you know, you buy 100 stocks and you take that route. I'm just more comfortable investing in a few that I really feel like I understand better.
Yeah. Yeah, and he started to stream in a very special environment. That's not a typical environment to like that. That doesn't represent like every day, I think. But and he said it many times himself. He doesn't usually have that many stocks, and he has also changed his portfolio philosophy many times, I think he said.
Oh, I'm sure.
Yeah. You want to pull up maybe ADES?
Yeah, sure. So have you, you said you've looked at advanced emissions, right?
Yeah, I've looked at them before. And I looked into the story. I've listened to the podcast, to Courage.
Yeah,
and I looked
Courage
into
had
the
a-
story and the background with management, and he also said that he was very excited about some of the people that got involved in ADES. So
yeah,
yeah,
like I said,
I have looked
the
into it.
story to me became pretty bullish very quickly for me. So I'm excited to be in this one. I have trimmed because I've been in it. Let me just run up to the chart here. I got pretty lucky. I'm not quite sure what my cost basis is here, but it's low. It's
Just need to pull it up again. Something happened here.
no, it's good because I'm getting my stuff all pulled up here. Yeah, my cost base is $1.51. So
And it's close to 3 now, right?
yeah, it's at, I think it closed like 260-ish.
You know what we have to do now, Dane?
69 bullish.
and you know what we have to do?
What's up?
We have to have a new premiere on one of our videos. You ready?
Yeah, go for it. Let's do it.
I think that is representative for you.
That's how it feels. That's how it feels.
Yeah. That was the good entry celebration video that we plan to use when we have, at least for now, what seems to be a good entry for Ranger Dane.
Yeah,
And I
I
know we
happen
have
to
been
this
speaking
one.
about it a bit. Sorry?
I said not only, yeah, and this is the thing is, you know, as I've become, you know, as I get further into my investing career here, there's every once in a while you land on a ticker where it just seems to click for you. It seems to make a lot of sense. You can see it kind of falling into place, and I think I've had maybe 5 or 6 of those now in the past 2 or 3 years, and my big thing too is always making sure that I go heavy enough into those ones, because when you are really bullish and everything seems to fall in the right place, and everything just screams that it's cheap to you, it's tough to make sure that you go heavy enough into those positions. And this is one of the first ones where I really went heavy into it. I was like, I'm very confident in this one. So this has been a huge win for me. I mean, any of my losses, this is totally offset. So, and this is basically, you know, in terms of just recently, made sure that I'm kind of hitting my marks for this year. So
Yeah.
and I'm still, I think I've trimmed maybe 30% of my position so far. So I definitely paid for basically my whole opening to get into this basically. But as I trim too, don't think that means I don't think this could go a lot higher. It's just I tend to tranche out as things go up. It's just to kind of lock in gains. You know, there's still the potential for dilution here. So don't get me wrong. We have to figure out what the company's going to do with that. But going forward, the more important thing is they have. I just want to find the way it's worded here so I can explain it to you guys. Where you were talking Rasmus, right? Rasmus, the one who came in and bought in. I know there's a history with him that some people think that he might be taking this in the wrong direction. So there's a risk if you don't think management's necessarily on shareholders' side. But I think in this case he is. I think he came into this one because he saw the potential going forward, and he's not going to sell off everything like some people are worried about. But just trying to find how it was worded here, because the reason why this one's a real back and forth is, like I said, there's a risk of dilution, and the bearish argument is that the dilution to complete the Red River and the Corbin and there's a KY plant to complete all those. It could be $20 to $25 million, and if they just did that in equity, equity holders would take the hit. And once again, same thing. I mean, this is like with Alto, you know, like if you're able to get into a low, I am involved in Alto, and I know the whole Justin story, and I know that management blindsided us with that news, which, you know, if management still hasn't said anything, and if they would just come out and I think, you know, kind of reassure shareholders that, yes, you know, the current environment isn't quite what we had hoped for, and you know, with the new management, that they realized where their mistake was, and you know, if they had just done that, I think they would have gotten a lot back. And obviously the overselling on that was just nuts. It made no sense.
60% in one day.
Yeah, I mean, and I get it. You got not really any bearish reports coming out at the time, so it was also probably, it had gone up so quickly too, you know.
Yeah, there was some hype connected to it, and I think people were, of course, in good faith. Everyone who spoke about it, and like you said, they should have just read the room a bit and see what's going on different websites from different investors, and come out and like put the expectations down a bit. And I feel like that could have been easily avoided.
Right.
You would probably have a drop anyways, but 60%, that was a lot.
Yeah. Oh yeah. I mean, it definitely oversold, but I mean, it happens. And that, you know, I'm also very fortunate. I got into Alto at an extremely cheap cost basis. So even even after the huge sell-off, I'm still way up. I mean, I'm over my 50%, which is my goal, obviously, is always to be over 50% with my buys. So, I got fortunate in that, but not to get too off topic and rambling about Alto, because that's we could do a whole stream on Alto another time. But but if you judge the capex expenditure that it's going to take to get these plants up and running to be able to really take advantage of the change in making sure that the carbon refining process is up to the new standards. What the question is when they are creating their current production, which if this is under courage and conviction, the way he has it stated here, he's got a 4 per pound annual capacity, which excludes all of ADES' other valuable assets. You get to 240 million valuation, and that's even assuming an incremental 20 million of debt or 40 million of total debt. So for the dilution, upon final capex, you arrive at 571 per share valuation for ADES shares. Again, this includes the valuation of a 60 million pound of annual pack production, and this excludes the value of the 30 years of bituminous coal reserves, and excludes the value of ARC's Corbin plant and its valuable and patented portfolio. So the thing is with the current production is as that generates revenues on top of it, if it does in any way, if it helps to dilute less or have to even take on any less debt, the story even gets better. So I think when you're talking about the dilution takes into worst case that obviously you get diluted, the price is probably going to drop from it, but only in a matter of probably a year or two, you'll get to see the headwinds from that, and then you'll get to see that at this current price, I think it's just crazy. In my opinion, there's something really here. So that's why I've been bullish on it at this point. And I'm not saying that people should be hopping into it now, because like I said, I'm already up drastically, and I don't want to tell people to. It's not to say there's not risk here. There's definitely risk here, but that's the whole thing. But I'm comfortable being in this one pretty heavy.
Yeah, and I think you mentioned a little bit of when I did some looking into this company, what I found was one of the biggest risk was what you already mentioned about the history of that. Was it Rasmus? His name was.
Yes.
I know that scared of. I saw some talk about him and his past and stuff like that, but I also concluded in a way that that was nothing to worry too much about here, and that the positive sides of this was outweighing that risk.
Right. And I do recommend there's the podcast recently where Courage and Conviction was on, and he goes into ADES pretty well. So if you guys want to hear what he had to say about it, but I agree kind of with his take on the situation. That's kind of what I had come to. Typically what I do is I try to get a quick understanding of what's going on with things. And if I agree from what my base understanding of kind of what like someone, for instance, like Courage and Conviction is saying, then I go back through the 10K and start reading through and start looking up Rasmus and see what the people are saying back and forth about him. And that allows me to get confident enough to where I'm going to land on this and actually take a position. And the other one recently that I got heavier into was Civio. And really, I mean, that was nothing crazy. I had been watching them and I just thought in general they were cheap, but then they came out with a great earnings report, which I know it's just better than it was. It's not like it's like a great earnings report, but they're also declaring a dividend. And I thought that was that was a pretty good solid win for me on that one too.
Yeah. Yeah, nice job in these ones, and thanks to Courage also for going. I think he has 2 episodes talking about this ticker.
Yeah, and it's definitely one that I'm closely following. As news comes out every day, I'm checking that one to see what's going on here.
Yeah.
And the insider doesn't hurt too, and there's ownership going on there. And the other thing too is currently it's basically a net territory. I mean, they have cash on hand, so I know it doesn't cover the entire capex coming forward, but still, I mean, that just gives you an even better margin of safety.
Yeah. Yeah, and even still, if you just look at the fundamentals, this looks attractive still, in my opinion. Of course, I would wish I would enter in the same way you entered, but we like this stock, right?
I like the stock.
That's the bottom line. Have you done some research on this Alta Fundamental Advisors, the LLC that is buying up here?
I think I just
Sorry,
took note that they were interested. But
I just noticed they have bought many years ago, so maybe it's not so relevant.
yeah, I tend to only look at purchases within the last maybe year. Even towards the end of a year ago, it becomes a little less interesting to me just because things change. I mean, if there's a big buyer, like let's say there's a 10% buyer, and they've been buying all the way down from, like, let's say a stock's worth $10 and they've been buying all the way down, and now we're down to like $4 or $5 and they're still buying. I mean, I'll take that as a relatively bullish signal because these guys are just, I know they're getting their cost basis down, but one of the biggest mistakes as an investor you can make is if you're going to buy on the way down, you better be sure that that you're doing the right thing. Because what I find when I'm wrong in a position, I kind of take like a Burry approach. Burry typically said that, he's looking for stocks who've just been, kind of, left behind or whatnot, or I think he called them roadkill. And at that point too, you have to set somewhere a stop loss. And if you're looking at, lows and there's a narrative turnaround and you get into something and it starts to drop enough on you, especially with me taking concentrated positions, I'll take the loss and just exit out of something. And if it jumps 200% the next day, I'll kick myself, I'm sure, but at least I didn't take the risk of kind of blowing up my portfolio because, like I said, I'm taking concentrated positions. So in order to offset that risk, I put stop losses in place because I can't have something drop too much and just be foolish enough to keep, averaging down on something like that if the narrative doesn't turn around like I hope. And in some of these small cap companies where I might not be wrong per se, but this might take way too long for the story to actually turn into something. I'm not gonna take that risk on.
No. And you quickly mentioned it, but in the beginning of 2023, there was some pretty big insider buys here from the directors, right? And they were new buys too.
Yeah. So all that I think kind of contributes to that. We're talking about the confidence of how this plan is going to work out. I think that just goes to give you enough other support to add to your confidence, and that's really what it's all about. As you become a better investor over time, it's your confidence in your plays. I think my biggest reason why I built the spreadsheets out was because I found before I had the spreadsheets and I'm trying to invest in a style similar to what RK was doing, and I'm looking at value as a proxy for at least my margin of safety purposes, I didn't feel comfortable like I had a whole rounded picture of what was going on. And I wanted that well-rounded picture to be able to be more confident in my investments. So after building out the spreadsheets and then really taking the time to use them, it starts to give you a better idea of when you're confident versus when you're still speculating a lot of different aspects in an investment purchase,
Yeah.
Is there any other tickers that you wanted to go through, or?
We barely mentioned CONN, but we both said that I could quickly pull it up so we can just get some support from the fundamentals.
Yeah, like I said, I mean, I kind of went through the idea for CONN. With CONN, I'm just pulling up the chart here because at this point, that's really all I need. CONN is one of those companies that when the markets look rough, it looks risky and it tends to sell off pretty heavily. I mean, if you look at look at CONNs on a 10-year chart. Now I know it's been trending downward ever since then, and there's other reasons for that. I mean, just outstanding shares increased, so I mean you're not going to see the same peaks each time. But I do find with its VIE structure, even in a rough retail environment, that if they're able just to cover their debt, they're going to be fine. And I think there's something to say for that. I think it's just, like I said, it's one of those that I'm keeping an eye on, and I'm just not convinced that in this environment right now that they're not going to continue to trend downwards for a while, but I'm definitely going to keep an eye on them. Have you looked at them?
Yeah, I'm pulling up the numbers now. For some reason, the sheet is very slow right now, so you need to wait a little bit till I get the numbers in the chart and everything. But I have looked at them in the past, and when we started to talk about it, this is a long time ago now, but we were discussing all the leases that were on the debt, right? That you could have been
Yeah,
a
I mean,
bit
they
tricked by
have
them.
leases and whatnot, and they tried to pivot a little bit with this by offering like in-store. There was like another company that was going to come in and kind of have a store inside a store, and it didn't work out. So that was kind of poor by management. But they also brought in their CEO who ran the company and did very well. I think he came in like 2016 the first time and ran it for like 5 years and really kind of turned the company around. Maybe it was before that. I gotta look at the timeline of that, but but if he's able to come back in and kind of get the company back on track like he did last time, I think it would position itself well. And like I said, I mean, you can see that this is a long-term cyclical company, and we're definitely at a low right now, and there is other things going on. But it is cheap. I mean, it's cheap on a lot of things. But I think at this current point, just the retail environment, especially for a company like this, is tough because not only right now are they not making any money on the VIE structure and like the credit that they offer people to be able to purchase these products. It's not great. I mean, they never really made a lot of money on that. So that's not really the part of the business is. And the big question is, and if you're trying to be bullish on this, is as we get to where credit for consumers is tight, are they going to go to companies like this when they want to purchase something because then they don't have to pay for it right away? You know, that's probably typically when they would do well. So as we head into that environment, you would expect that things would start to improve, and so far they haven't improved. So I think that scared off a lot of investors because that's really the thesis there. And you'll notice it bounced a little bit this last day. I think it's up 10% from the weekend. Yeah. So yeah. I don't know. Maybe we've started to find a bottom in terms of at the current environment where we're at. And we'll have to see how much it can bounce back from here.
Yeah.
I'm not bullish enough yet though, that I think we found the bottom, which is why I'm just kind of keeping this one on my watch list.
Yeah. Right.
No, but yeah, I mean, really, for those of you guys who haven't really looked into cons, or if you don't live in an area that has the stores, they just offer additional credit solutions on top of being a retail store, and it basically allows people to buy products on credit and just pay it back over time. I mean, that's really the other part of the company that makes them different than most retailers.
Yeah. Yeah, I mentioned it in last stream, like, and I've talked with you about it before. That like some of these companies is probably a lot of people know about them, but it's a bit tricky when you don't live over there and have been in them and know the business and stuff. So that's a big part of what I do. That's why I go through reading the descriptions and stuff like that a lot of the time, you know.
Right.
Just to get a quick idea what it is.
The other thing too is, I mean, you can go in and you can look at the VIEs and you can see what the percentages that they're paying, you know. So I can give you some confidence. I mean, if people are purchasing these VIE structures, obviously they're happy with, taking that risk on and assuming that they're going to get paid back. You know, one of the best things you can do with a company that's this leveraged and using this style to offer credit to their consumers. Is are people continuing to buy into these VIE structures? And if they are, then it just helps you to see that it doesn't make me think they're going to go bankrupt. They do have some covenants, so it's important to watch the covenants. But as of now, the last 10Q, they're well within range, so they haven't broken any covenants or anything like that. So I don't know. We'll have to see. I think when I would start to get interested into cons is when you just start to see some things recover. If I see a few things recover, this is one that I really think could be a multi-bagger.
We talked about it also a bit in the past, that the lack of insider buys. Does that bother you here? Because I was waiting for some insider buys, and then I remember I missed it when it finally happened, and that's like close to 1 year ago, and it wasn't even that big.
No,
so what do you think about that?
I don't even. I'm not impressed by that at all. So just another thing that just it doesn't allow me to be quite bullish enough to get back into cons at this point.
Yeah. Yeah, I think. Do you have anything that you want to go through, or?
Like I said, I still got to go through my actual dashboard and see what popped on for the yesterday for the rest of the week, and look at the weekly movers and stuff like that. So and I still had a few tickers from Wednesday that I was going to go through. So I mean, if you want, we can look at one of those, or if you want, we can take a pause here and just kind of get caught up with everything else.
Yeah, we can maybe do a one or two more if from the tickers you just mentioned, or what?
Yeah, like I said, the other one that I had up, and this is from Wednesday, and I'd have to look again to see exactly what caught my eye about them. But Hydrofarm Holdings is HYFM.
HYFM.
FM. Yep.
Yeah. Give me takes a little bit of time, but I'm pulling them up now.
Yep.
Have you looked at them yet? Or?
They're for hydroponic equipment, supplies, and like a controlled environment agriculture. So it includes lighting, indoor climate control, nutrients, plant additives, stuff for cannabis, flowers, fruits, vegetables. So kind of anything that you're doing in almost like a greenhouse type building.
Okay.
They have a bunch of different brands that they're a part of.
I think I've pulled them up before, I think, or they have come into my daily movers. I've seen this before actually, but I don't remember much.
Yeah, I mean, they got a smaller market cap. They're only 49 million, so it's not a very big company by any means, and they do have debt that they've taken on.
Yeah. One more sheet, and this is good to go.
Yeah, you're good. I'm just working my way through getting all this stuff.
So it's a Canadian company or what?
No, it's Canadian. Is that what you said?
Yeah.
No, it's well, actually, hang on here, because I just pulled up something and it's not what I thought it was. I don't know what's going on here. Here we go. Yes. Well, no, it's in the United States, but obviously it has equipment and supplies being distributed through the United States and Canada. Canada being completely open to cannabis obviously creates a big environment. You got to think, any kind of agricultural work going on in Canada, there's a big chunk of the year that Canada is too cold to really grow a lot. So they're gonna definitely benefit from this kind of setup where they can grow stuff inside or in these big plants where they can keep the stuff growing at times a year that normally would be impossible. And obviously that covers a huge swath of America as well.
Okay. So yeah, my sheet doesn't pull it off because it's probably a different ticker in Google Finance. So I'm not sure if I can look at these numbers because I get a lot of errors.
Gotcha. Yeah, and maybe the information isn't too old. I mean, it is only 3 years old, and it's basically just went down this entire time until just now. It's just finally finding a bottom, but we're talking. It looks
Yeah, I
like a
see the
low
chart.
around 70 cents. So
The
we
chart is
bounced
not
off the bottom
exactly.
now. But sorry, what was the last thing you said?
I just pulled up the chart and it doesn't exactly give you a lot of confidence.
Well, sometimes the best winners are when the chart looks like shit, right?
Yeah,
As
that
RK
is
used to
very
say.
true.
But yeah, I mean, if you're having trouble pulling up the data too, we can go to one of the other ones. You want to try one of the next ones? We'll come
Yeah.
back. I can come back to this. You got the other one is OLPX.
OLPX.
Yep. It's a science-enabled, technology-driven beauty company. So hair health. It's got complementary products from like a holistic type side for hair health. It goes through professional, retail, and direct-to-consumer channels. I'm trying to see. Uses key treatments. Its products have an ingredient bis-aminopropyl deglycol dimaleate, which basically just repairs hair damage. And that's under a few different names, and typically sells most of its products through olaplex.com and some other third-party e-commerce platforms. So this is one I probably have to go talk to my wife about, see if she knows anything about Olaplex.
Yeah. I see. I pulled up some articles that is very bullish on it, but also that like a bit like we talked about earlier, that the guidance, the future guidance, is a bit negative. Did you find this because there's a drop, or?
I'm gonna go to my dash and see why it actually caught my eye here. All right, so Olaplex for me. So when I'm looking at mine, I will say the revenues are actually kind of low compared to market cap, which is usually kind of a warning to me. But really, it's generating cash flow. It has cash on hand. It had retained earnings. I mean, some basic stuff. Nothing too crazy. In terms of on a book and a tangible value, it's not super cheap, but I had seen too, it's down almost 200% from its high. So probably one of the few. I honestly, a lot of times this I could tell right now because it's almost 50% from its 52-week low, and like I said, on a book value basis, it's not super cheap. So a lot of times I'll look at a company like this, and it's probably not going to be a buy anytime soon. But I like to just get it in the database, have a look at the company, see what I think about it. And then from that point on in the future, if it pops up, I'll at least have already looked at it once so I can make a quicker decision on if it's something I want to get interested. Because like I said, when you're taking concentrated positions, sometimes you got to be ready to make that purchase when something finally gets to an area you're considering cheap enough.
Yeah.
If this was at the low, this would probably be very interesting to me.
Yeah.
Which it looks like it got down to what, almost a dollar.
135.
Yeah. And if you look at every technical, it's oversold at that point, and then you had a huge purchase on November 6th-ish, where all of a sudden the stock just popped back up, and now it's getting already back up into overbought position territory. So Um, I'd like to see probably if this pulls back to get more support around that $1.50 mark again.
Yeah, that's there's a big increase in the volume too.
Right,
Have you
that's what I'm
checked the
saying.
owners?
When you see that volume breakthrough, I mean, I don't think there's any more bullish indicator for technical analysis. But like I said, not that I go off, just the technical side of things. It's really tough for me to be, the way I look at technical analysis is the same thing as narrative or insider buying. If I see a technical trigger on top of my if I'm bullish on something, that's just one other thing to add in there to make me feel excited about the position. And the other good thing too is if you're getting into something, when you see the technicals go onto your side, the other technical analysts are looking at that too. So sometimes it's nice because if I'm in it right before the technical guys are, and then all of a sudden the technicals change on top of it, those guys are all going to hop in right after me, which kind of gives you a small advantage in terms of timing if you're able to keep organized and to see it right before everybody else does.
Have you seen the ownership?
No, I'm just watching, seeing what you're pulling through here.
There's a big owner, Advent International LP. They have it as their second largest. It's a hedge fund, I think, and they have it as the second largest position in their portfolio, 14%.
Gotcha.
And they own,
Can you go to them so I can see what their holdings are? How many holdings they have?
yeah, here they have 22,
Okay.
but they
I'm just
have a
looking
lot
at
of
those.
money.
Just seeing if there's any other companies that they own right there that are interested to me that I've seen. Most of them are kind of bigger stuff. Oh, they're in some smaller things. They're in 5. So, okay.
So they have seen something. And do you know about them?
I don't think so, but so I do like to just pull them up real quick just to see who they are. Like what
They
kind
are
of
from Boston.
yeah, go to their investment strategy under that, under what we do.
Yeah. Just like the normal talk.
Okay, just so they're sector focused and strategied, but it's not like they're just saying that they like to understand the business too, though. It doesn't necessarily say that they're value focused, but either way.
No, they didn't mention that, but and it says on the description in Whale Wisdom that they are a hedge fund.
Yeah, either way, just so not necessarily, but not a bad thing to have them interested in something.
No. And they own 75% of this company.
Yeah, well, when was their buy too? Does it say?
Let me check again. First on 2021 Q3.
Yeah, so they bought right at the IPO and have got kind of smacked on it too, though. So
yeah, they are down big because if they have not averaged down, this it says estimated average price 24.
But I mean, we'll say revenues are increasing, earnings have been stable.
Yeah, and they are. If you look at the chart now, it looks on an uptrend. and this is the weekly. So every week just up, up, up. It seems to have turned a bit, right?
Yeah, I mean, when you start to get down to these kind of bottoms, and they are generating cash flows. That's the thing. So then it's
Yeah.
just seeing, are they able to keep up with the leverage? Because if they're able to keep up with the leverage and they're going to generate cash, then now we can start to see something turn into something.
Yeah. You see, their earnings has always been positive. So
Right. Where
that's awesome.
how much debt do they have? They do have a lot of debt though.
I get 657 in total, and near term I have 7 million, which they can cover easily.
Yeah, I don't care so much about that, but just in comparison to assets, I just like to see total debt compared to assets because
Yeah. So
they are highly levered.
yeah. Yeah, they have some debt here.
Although, is that all? Like, what is that debt? Because you're like yours is saying that it's considered safe and everything.
Mine is safe, so I'm checking the 10Q now. There's long-term debt 650 million.
Hey, Johnny, can you zoom in just a smidge on that?
Oh yeah. Here.
Yeah.
Well, they don't say so much more. Do you want to? It's up to you, Dane. But do you want to go into FINRA?
No, we can't. Can you go to the notes to the financial statement on that,
Yeah.
and then go to the debt and actually see what the debt is?
Oh.
Because one of that's a revolver loan, and then they have a secured 7-year term loan. So I mean, and that's from 2022.
But the
So that's
revolver
not
also.
due for a long time. So they do have a lot of debt, but it's not due for a long time.
Yeah.
That's crazy though that the loan facility is at 8.9% interest rate. Doesn't that just sound high?
Where here, this one? Yeah,
Yeah,
that sounds
that
high.
just sounds
Yeah.
high.
Yeah.
I mean, I know that's the current rate environment, but all right.
Where does it say when this is due?
It just
Oh,
says
down
it's
here.
7 years, 7 year senior secured. So I'm just adding 7 years.
Okay. Yeah.
It might say somewhere that due in 2029, but
Yeah.
if you scroll all the way down, yeah, I was gonna say something said down there, but nah. Either way, doesn't really matter.
No, so but yeah, mine is still safe though. I don't know why.
Well, it would be safe then because the only thing you're looking at then is the short term debt, which the short term is just the interest on it. You know what I mean?
Yeah.
But
the
that's a
debt is
senior.
actually,
So you're talking FINRA. That's a senior secured loan. So that's not a bond. So on FINRA, it won't list it.
yeah.
So we don't have to go to FINRA.
I know you hate them now.
I just they just need to go back to the way they had it set up before. I don't hate FINRA. I think that what they do is great, but like just the setup before was so much better.
Yeah, it was. No, but this
All right.
is
The only other one I had up was WOR. If you want to pull those guys up.
WOR.
Yep. Worthington.
Worthington Industries.
Yep.
What do
In
they
metal
do?
fabrications, huh?
Do you have the business description?
Yeah, although it's a little to read it. It's a designer and manufacturer of brands. Company operates through 3 businesses: building products, consumer products, and sustainable energy solutions. Comprehensive portfolio of building products include heating and cooling solutions, specialized construction products, water systems, ceiling solutions, and metal framing options. Its tools is for outdoor living and celebration categories, sold under the brand names Coleman, Burns-O-Matic, Balloon Time, Level 5. I don't know if you've heard any things, but some of these brands are pretty well known, at least in the States.
Okay.
Sustainable energy has to do with onboard fueling systems and services, as well as gas containment solutions and storage, transport, distribution of any kind of industrial gas, hydrogen ecosystems, and energies like compressed natural gas.
All right. I saw there was some articles, but very little engagement. So
Ironically, they had 19 million shares in the company Nikola, and
oh really?
sold them off before it completely collapsed. That's what it says.
Nice. Where did you read that?
Then Seeking Alpha. See, it all comes around. It all turns
Yeah,
around.
it feels like this is a
What are
way.
the chances?
Here I see it. The company firma held 90 million shares in Nikola. Uh,
Wow. So it looks like they had a spin-off of Worthington Steel, and they said Worthington Steel now trades at 24 and Enterprises trades at 50, which is a combined value of 74. So just that spin-off went from $60 a share to $74 if you own both. So that definitely unlocked value. That's smart on management's decision. That's some real Greenblatt right there.
yeah. Okay, let's check the fundamentals here.
Looks like a pretty historically well-run business, to be honest. I mean, have you looked at a long-term chart for these guys?
Pulling it up now.
I mean, if you do like a 10 or a 20-year chart, I mean, there's been a lot of dips, but this thing is up and to the right the whole time. It
Yeah.
looks nice.
Yeah, that looks.
This is getting into the category for me. It's just a well-run business. And with what well-run businesses, like for instance, I own Coke, and I know that's not typically what people would think of in terms of our style of investing, because it's more of a longer-term hold. But Coke for me when it was cheap, and it's not Coke as in Coca-Cola. It's a distributor for Coke and other soft drink products. It will also just announce the special dividend. Thank you. It's just a well-run business, and when something gets relatively cheap, it's not gonna get super cheap. But that if you buy and hold it, I mean that's where you can start to see the long-term baggers over time. And the only thing I have to check on that company every once in a while is just to make sure that things are continuing to grow at the pace I expect them to. I think the share price now is more than doubled for me, or close to doubled for me. So
Yeah. No, but this looks maybe. What do you think in terms of the tickers we have gone through today on just like purely the fundamentals and everything? This looks a bit good, right?
no, I like this company for sure.
But it's high
they've
already.
been paying a really stable dividend, which is at an all-time high. They have great cash flow. They even have pretty good net cash flow. They're positive net cash flow even on the long term. Book values just keeps going up. So I mean, this is just a good business. I mean,
Yeah.
it looks like they struggled just this last trailing 12 months, but I mean, you look at the last decade. I mean, it's been doing well.
Yeah. No, it looks like a well-driven company, and historical earnings also since 2010 has been on the plus side. They have one negative year in 2009, but the rest has been up. So, and the dividend is
Yeah.
consistent,
So
and
this is the kind of company when I put it in my database too, I'm probably going to put one of my little things that it's a great company. And great
Yeah.
companies, you know, obviously before I invest, I'll double check on things. But if this gets cheap for some reason, and usually cheap to me is whatever I value it at, it's maybe like a third of that price or 2/3 of that price, I should say. So if it's worth, let's say $100, around $66, in my opinion, starts to get interesting because it's going to be tough to get below that. With these good companies that kind of just they keep trudging along and they keep just generating cash. They're just good companies, you know. Like this is like a Buffett style thing. It's just too small for him to hop into, you know. But make good sales. You know, they make good moves, and management constantly seems to be on top of the ball here. So this is one that I if it ever gets into my area of cheapness, I'll hop in, and it's going to be a longer term hold. Typically, when I buy these, they are going into a different portfolio. But I like as I'm going through these companies, and I see these kind of ones, because you know, someday when Johnny and I have proven ourselves here and we're, you know, got our multi-millions, this is more the companies that you'll have to start looking into, because the turnaround stories as you get bigger are harder and harder to find with smaller companies. You just kind of get priced out of them. But
yeah.
they will interest me as you know, as you further develop as an investor.
Yeah, and we have actually talked about that hypothetical scenario, that if you actually start to make a little bit of money here, that you also need to change your style a bit, right? Or at least we have agreed a bit that we have similar thoughts about that.
Yeah, well, I mean, it's no different. Like you talk about like a Buffett. Like Buffett, even nowadays, he'll tell you, he's like, if I didn't have as much money as I had now, I wouldn't invest in the same way I do. And
Yeah.
he didn't when he was younger, because when you have
No,
less money,
he
there's so
didn't.
many more opportunities to look into, and you have to look at different things. And no matter what, don't get me wrong, when I'm looking at companies, I am looking for the value. I mean, they have to generate something. The business has to be successful in some way. Either that, or it's just priced so foolishly, and usually because of some dumb narrative, or people just are expecting something to happen when it might not. Those are the other opportunities that you get in this position. But it's once you start to outsize your positions, in terms of, like, you know, you can't move in and out of things quite as quickly as you'd like to. And even as a concentrated investor, I'm starting to notice too that, like, you know, where before I could put in a purchase and it's going to go right through. It's not going to necessarily go right through. I'm going to have to wait a little bit for things to get to where I want it, and I'm going to have to take multiple positions to try and average in and out of things. So you just you know, and I'm talking illiquid stocks. Like, you know, I'm not obviously don't have a portfolio the size enough that, like, if I wanted to hop into Apple, like I could hop into Apple. But for some of these smaller companies that don't have, you know, millions of shares trading every day, it can be a slow process sometimes.
Yeah. I just found that because I saw the insiders, they own 38%. So I checked them up, and there's a John McConnell that also owns the ice hockey team Blue Jackets, I think he said. Columbus Blue Jackets. Have you heard about this man?
No, but you know, someone to look into.
He owns a third of the company. So,
oh no, Columbus Blue Jackets, that's a hockey team.
Yeah, ice hockey.
Yeah. Interesting.
Seems
And,
like
34% of shares. Well, I mean, there's a big shareholder right there. No, I mean, like I said, this company, it interests me. It's I think it's a well-run company. I would consider this in the right situation in one of my other portfolios where I'm looking at more longer-term holdings, because one of my portfolios is more of that style. It's good companies, so I'm going to hold them for the long term.
Yeah. All right, should we end it for today?
Yeah, you have anything else to add, or?
No, not really. I hope that we can. I hope that we can see you on Tuesday, right?
Yeah, I hope to be able to stream Tuesday. Sorry last week, guys. I ran into some technical issues, so I wasn't able to get the stream out like I was hoping. But no, I do plan on streaming Tuesday. So it's always just trying to find the right time to do it. I have so many other obligations, so it just depends on the day. But I imagine I should be able to. And if using the Twitter account or whatnot, what we'll probably do is we'll post. If it's not going to be at kind of the regular time, which we're both assuming we're going to do Tuesday, Thursday, and the Saturday morning stream, and we'll see. We might be able to adjust it. I mean, this is pretty early for the States time. It's probably obviously a better time over in Europe, but we could probably maybe do it a little bit later too.
Yeah.
It's just
we are playing around with some ideas on the schedule, and we just try out some things, and we both have our lives to live also, so it's a bit tight the schedule, but we are open to like change it around a bit and see what works well for all of us.
Right. So we'll keep honing on that, and if you guys have any questions on anything in here too, as the stream starts to expand and whatnot, I'm sure we'll have a lot more questions that get mixed into the fray, and we'll be able to bounce our ideas off with you guys, and hopefully be able to answer your questions and or make you think of things that we haven't thought of, because that's just as important. You notice when you first go to stream and you're by yourself too, it's don't get me wrong, I can sit here and talk all day about investing specifically, because it's something that interests me, and I'm always trying to improve my understanding of what's going on in my I mean, there's just so much to it. But once we have other people in the stream with us, I think the flow of it will become a lot easier. Johnny did his first stream, and when you're in here and you're just doing it all by yourself and stuff, and you're trying to explain your thought process, sometimes it gets tough. But
it's a bit tricky.
Yeah, it is. And
it's a practice.
Either way,
we need to practice.
It's something that as we do, I'm sure we'll continue to get the flow better, and hopefully keep people intrigued and interested in this kind of thing. And either way, we're going to be doing this regardless, because it's become a long-term hobby for us.
Yeah.
So
yeah. All right.
Yeah, I think.
Where did your cowboy hat go?
Sorry, what'd you say?
Where did your cowboy hat go?
Oh, I just Ranger Dayne's coming to an end here. Got to move on to life.
All right. See you guys then on Tuesday, and then we will see how it goes next week. Maybe we get some opportunities then that is a bit more exciting than what we managed to find this week. So see you then. Bye bye.
All right, guys. Have a good one.